All right, Monday, 11:30 a.m., February 27, 17. Okay, start off with Microsoft. Sent this out with Microsoft. What we're dealing with is just plain old math, right? How much do you want to lose, and how do you want to lose it? All right, we're going to go from there. So start off with Microsoft. So Microsoft, this is an MACD, and this is the stochastics. All right, so we basically had a swing. Why are my bars? I'll pop out there. So we had a swing, right? It turned up wherever we're at. It swung higher. Okay, so basically now they just crossed, rolling over, whatever. Microsoft will say has stalled. These are weekly bars, going to daily bars, daily bars. Okay, so now we have daily bars, and it's doing its little swing thing. Here's the high, a little under 66. We'll use round numbers and say 66. Okay, dip below, still holding this median line, we'll say. All right, here's our sideways pattern. You monkey shine. Where are you? Yeah, bye. All right, that'll work for now. Okay, so we have sideways on here, right? February daily. Okay, so this is daily on Microsoft. So we have a sideways pattern. Okay, so the ones I sent you were 65 calls. Okay, well 65, Kev, is like, way up there. Where are we at? We're 65. 65 is up here. Okay, so it's the gap fill. What I'm going after here is that we all know that the weekly had stalled. Okay. All right, so the weekly had stalled. So here's the daily. Okay. Here's 64 and 62. If it just goes above the bodies, okay, you're buying a 65 call. It was a nickel. It's trading at a dime now. Okay. What happens, we'll look at the option, but what happens if it gets to 30 cents or 50 cents or whatever? Okay, the whole thing is just math. You're throwing $5 at it, plus your commissions will say, round turn will say $8. Hopefully some of you are $7. You buy one option, it costs you $1, and that's the end of the story, which is a penny. Okay, so you're buying an option at a nickel. The other thing you can do too is stagger it the other way, where you say you buy one at 8 cents, one at 7 cents, one at 6 cents, one at 5 cents. And then you're saying, Kev, buddy, that's only one of 4 legs. We're playing 4 different ways on this thing, right? If it goes up, we're going to try and buy the puts. If it goes down, we're going to buy the calls. We're basically doing the opposite here, okay? So now we have Microsoft. Okay, so Microsoft can't say you're in, you bought a call at a nickel or 7 cents or 8 cents, whatever you are in, okay? So now you have to kind of weasel out of that deal. But the opposite side is where's the most pain on this? Well, the most pain would probably be is if you can work your way back up. Here's 65. So you put in an order, when we get to the option, you put in an order. Bonkerville. Okay, so what do I have here? Here's a 65 call at 9 cents. So what you do, you come in and you say, okay, I'll buy everyone at the money. 65 call, 65 put, at a nickel. Okay, it costs you a dime plus 6 cents commission, so it's 16 cents. Okay, so you got to get 16 cents for one of these. Okay, so if you bought, you haven't bought the put yet. Okay, so you're only in on one side. So you just want some targets. So I actually see 4 targets on here. I see this little line here, 13 cents. If I buy one at, if say I bought at 8 and 7 and 6 and 5, okay, what was that? So it's 15, 25, try that again, 20, 26, and 8 commissions, 34. So you need 34. Well, here's one up here for 34, okay? So what you do, all right, put in a cell way up here just to start it off. You have to have some sort of target, whatever, on you. What happens if this is so fast? Oh, it's just so fast. And it's over with. So you have to put in an order. So what you do is you go over to like bracket on here, and then it's triggered, okay? And this is your cell, and change it to good till cancel, all right? So I'm just going to do this for future stuff. You know, if it comes through, all right, 34 minus a nickel is 29. Okay, so 29. So if I put this on at a nickel, okay, you can see it already has a cell there at 34. So I'll just put this here, okay? All right, so it's just a resting order. This is, we're looking backwards, but we're working it backwards. How do I take advantage of this? Well, if you get filled, then you get, you already had your automatic stop. Okay, so if you're staggered down like 8, 7, 6, 5, whatever, you know, hit a line here, hit a happy place here, you know, hit a line here and hit a line here. Okay, you know, if you sell one at 13, you're still SOL. And the math part of all of this, right? If you get filled, what happens if you get all four at 13? What's your average cost? But at least you have some sort of plan, right? Now, this is only one side of it. It's only Monday. It's a nickel, whatever. That, you know, you're that's how it works. If you want big numbers, you have to go against losers all the time. All right. Now, how I look at this one here is what happens if we go to 65 and these things move up there in the 50s. Well, you just sold them all off at 34. All right. So, you know, you can hang on to one or just watch it. Now, this is just one legs, but you have to set it up. You can set it up for like the puts. What happens if we do get up to 65, say on Thursday? Okay. So they're trading at $1 something now. So I have to go all the way down and start putting it in orders. 8, 7, 6, 5. I'll do that. Okay. Everyone wants to get a penny. Everyone really wants it for free, but everybody wants it for a penny. Here's a nickel. We saw that it dropped to a nickel today. How do you know, you're not going to be in the queue behind 100 million people? So you have to get it. It's only a penny. Okay. So it's $1. All right. So you get in at 8, you get in at 7. You didn't get in at 5. You kind of weasel your way back out of this. Okay. So here are the numbers on the flip side for next week, or for this, for today. Okay. So these are going to be targets if you fetch that on the flip side, if it comes back down, right? What do we know? We know that Microsoft's weekly has stalled and we're sideways and we just poked through. Okay, so if we go screaming back up to 65, what happens if, that catches the shorts, or like, ah, crap, whatever data we have GDP tomorrow, holy buckets, everything, you're just putting it on and you're trying to limit your risk. All right, so now you're trying to get these things that are at, $1 at a nickel. Okay, all right, but what I'm getting at here is that you have targets, targets that you're aiming for if you get filled. Here's one at 25, here's one at 40, 51, the same thing again too, is if all of a sudden Microsoft moves up to, in those calls and they move up, you may want to sell some off. Well, what happens? We turn a nickel or 8 cents or something into 20 or 30 bucks. You do that every day, then you could start adding more. But you have a plan, and all you're doing is, are the options going to go to zero today? Probably not, but they dropped down to a nickel. Where were they in the past? What happens if Microsoft can swing in the other direction? But you're just playing both sides. It starts off with the weekly is sideways. So we're going to get when things go sideways, option prices come down too. You know what? All you're trying to do is trying to just get out of the thing. Have some sort of plan. Bring your in, bring your out. Like today, okay? So you got all that. So the orders are just sitting there. Good till cancel, whatever. They're just sitting there. Buy it at this price. I guess I didn't. Did I put the brackets in? I guess I did. Well, no, I guess not on these here, but whatever for now. But these are previous targets, and they will shift. Okay, they'll shift lower, but if you put it in, at least you have an idea. If something should happen, right? You already have high targets. That's the deal. I mean, if Microsoft goes up to like 65.12 or something, then comes farting back down, just like Bank of America did, or like the calls on Nvidia. I mean, they traded for a penny and then they went to $1.40. There's nothing like having something go from $1 to $1.50. And all it is a plan. You have it. You make it. You make 10 times. How often do I look at them as, I don't think they'll get to 65, I'll say, but if they go up 50 cents, you had a plan. You know, those on the call side, here's on the put side. So now you're waiting, Microsoft is down today. You know, and all it is you just have your orders resting there. You have some targets set up pretty high on here, so just in case it does swing, you know, even if Microsoft gets to 65 and the puts come down, hey, look, you still have calls maybe. You know, and that I'm telling you, it's grab your little spreadsheet. You know, put down any percentage, 3% a day. You know, what do these move? 35% already. Okay. Some of these options move, you know, lost by half. They lose half their amount, right? Fibonacci, there's a bounce. You know, what happens if it bounces a third or whatever? But the deal is, and the worst part about these freaking options is you guys are with your commissions. They kill me. I'd love to earn your commissions. You know, but you guys want to swing for the fences. You want it all right now, and you got to have a freaking plan. The plan is you're throwing $5 at something, trying to get $50 out of it. That's how I'm looking at it for right now on this Microsoft options. All right, so you kind of straddle the number, the 64, 65 area. You're watching one thing all week long. It becomes mechanical. All right, so Microsoft is going sideways, which isn't good for options holders, right? But it brings down the volatility. We had a good dump today, so what are cheap? The calls, right? So you're buying calls for the flip side. What happens if it goes up there? Well, there you go, right? What are the odds? Well, obviously not much because they have it pegged at 65. What happens if it falls more, Kevin, and it's at 63? Well, I mean, you know, you have to have some sort of plan. You know, what do I have? Let's take a look. And I got a lot of crap. I'm trying to get rid of this crap, of course, guys, and gal. All right. I saw this, I think, last week. I don't know if I'm still holding on to anything. Microsoft. Straight up puts. Both calls and puts. Oh, these are resting orders. Okay. All right, so I just did straight up puts up here. That's what I did. Okay, so here's, you can see when I go and hit these, they're at the money. So it tells me what I was looking at when I hit them. So I bought straight up April and January puts at 60 because I went after the weekly has stalled. All right, so I have the rest of the quarter, second quarter into this one for April. If we see what it, you know, I went through yesterday on a 10% pullback in 2 months in 1997 in stocks pull back 10%. You know, I mean, the Zipper puts 10% lower would make them 59, 58. We'll say 58. You know, all of a sudden this is what am I at, 65? This goes to 8. So it's from 2 to 8. And all that was just going after it because the weekly had stalled. They went up to April, and then I just threw one on here as far out as possible too. And this is the bearish tint. What happens if that's it for April? Like we saw with whatever, I think Natty Gas or whatever. There have only been 3 signals or something in the last year. You know, just off the basic daily crossover of stochastics, and you know, 3 trades a year, holy buckets. You're wasting a lot of time sitting in front of the computer, right? So the plan is set. The money comes out of your account with these guys, whatever. It's just sitting there. Now you can just stare at Microsoft all day long to see what it does. You can see it. Okay, it's what do we got here? We got a gap up here. Oh, here, let's go back and close out. Take a look at that. I think the NVIDIA, do I still have it on here? Okay, so the NVIDIA deal, right? So we're doing the goofy options thing again. All right. So last week it was the hunch was if NVIDIA breaks below 100, somewhere in the mid to lower 90s is the next support. So I've calculated what I could get off of these things if the price fell, and they fell. All right. So now we're down. I was looking, you know, now they're at 20 cents and 40 cents. And it's like, well, okay, how should I close these things out? You know, more than likely I could take the money and buy the puts here. I actually had the puts, so those were covered rates. Yeah, they were. So do I want to buy more puts? No. Actually, I want to try and sell some calls. I think 106 on the upper end. 106 puts. Put in, here we go. Here's a quick trade, right? NVIDIA. we at with 106 puts? The low. We got a low on here, $2 and something. You know what? I think I'll buy it for a nickel. Now you better. You know what? I'll buy it for 8 cents. Good till cancel. It won't be chained in with an order, but combo order. All right, blah, 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 blah. But we'll just let it rest, whatever. So I guessed at 106 because I think I remember it bouncing around at 106. So I just threw something in there. 106 puts at 8 cents. You know, what happens if they blast through on Thursday morning and then something happens and all of a sudden Nvidia's back down to 103 and I paid 8 cents for something and now it's at $3. You know, do I know it? Well, I don't know. Look at the chart. Okay, so this is Microsoft. All right, we have a couple of lines here and whatever. You know, that's the deal here is if you're already prepared. If Microsoft gets back up to here, you buy some puts. You know, we're working on a symmetrical triangle here. That's on a daily. You know, so I think I sent the chart on the daily. So what do we have? You know, those are just vacillating. But you had to bounce off of here. You know, what's this line here? You know, set an alarm, wake me up. Am I alive? What am I doing here? They tell me this is a business. I'm supposed to treat this like a business. Yeah, set an alarm so you're not late to work. I mean, you know, I'm going to make lots of money in the market. Well, do you have where you're going to sell it? No. What about how much money this is going to burn up? All of it? Well, no. I mean, you know, it's a business. Where do you get out and why? Well, how many do I own? Well, I bought $50 worth. You had four options on this thing, right? Calls or puts, at the money or outside, right? So we didn't buy at the money calls. We bought the out of the money. And what's the hunch? The weekly stalled and blah, 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 and yada, yada, yada. And everyone, they see that. Oh, it broke sideways. It's going to crack. Okay, I'm wrong. Whatever. I threw $5 at it. I got a whole week, $1 a day. Oh, boy, it's better than a scratch or better than a lottery ticket, right? And like I said, what happens if it does get to 65? Well, then all these people that, you know, was there volume here when they cracked the lower end? Well, let's see here. Where's my orbs? All right, so here's a happy place support. All right, so you say that's good. So where's the next stopping here? Here's 30, and here's a level here down here, 23. You know, here's a happy place back here. These are daily. What's this look like? Okay, so what do we have? Here's about a half. I said about a half. Well, these options come back about a half on here. You know, you can cancel all the other orders. You know, I mean, if it goes up and comes back again, do you want the other calls? You know, maybe this is just the one trade and you know, but it's just, you're basically just working off of math. You know, this looks like a rounded top, yeah, but you know, to come in the money, they got to go all the way back up. It might not happen, but if it gets up to here, you know, the options might pick up some steam. You know, and that's you know, that's all it is you're just trying to limit how much the bias. Well, you know, we're shooting for maybe everybody's wrong here, and Microsoft squeezes up one more time. All right, so you can look at the chart a bazillion different ways. You can follow one thing, and it's just straight up math. And then I need to change these. Oh yeah, let's take a look at the volume. Is there any volume on here? Lots of volume. Volume again, heavy volume. A little bit of volume. Well, maybe they kind of squirt out these people. You know, you're taking a week's worth of bodies here. you know, to get it back up here to 52 or something. Well, wake me up when it gets over this, right? 23, you know. But it's just you're in for a nickel. You're in for five, you know, put a nickel on each one of them all the way around. 65 call for a nickel, 65 put for a nickel. See if it gets to 65 at the end of the week or what, maybe you're in, you know. But that's all it was just limiting the cost. I need to now, now I get to watch the option. Okay, so this is 65 put. So it's whatever. I can set an alarm for this too. Wake me up before you go. Go find something to do. Because it's just once you have your order in and you're just basically set. You just have to fine tune it. You know, if it goes up and what's this, 26 cents, you know, you can peel them off on the way up here too, little lines. And also you can find the volume on here too, volume traded. I think that's set for, so I was just running through the charts here. These were mostly weekly charts, just seeing if I just notice anything. All right, here's one. Came into earnings, right? Earnings came down, bang back up. This is weekly. What are the odds that this stock that's gone from $5 to $20 that this is it? Well, you don't know. I don't know if they have options. What does the chart begin to look like? Is this the last hurrah? You know, if it comes through here, EX, 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 EL. Options. So we have some options. All right. March. Okay. So what do we have going on here? Say we're wrong and it goes up. All right. Sell. Vertical. 50-cent credit. So it's a 50-50 shot for X amount of time. All right. That wasn't a fast fill. What I was looking for here is after you get the order, after it's filled, you go back in and get a reversal and then get out of the thing. You know, have some sort of order in there. All right, so that's it. So now I hit a reversal, opposite order, great opposite order, and it cost me $56. So here's my debit, so I have to buy it back. All right, so say you want to make $20. So 20 half of 50 is 30, and $6, 30 is 24, which is a little under half. Okay, but till cancel. You know, that here was your bet of, you know, $50 or whatever. You can keep it at the end of the day, take a look and see how, you know, how it's moving. You know, but the deal is it's the commissions. I mean, that's the worst part about the whole deal. So you sold it for $50 and $6 of it was commission, right? 2 trades in and 2 trades out, $1.50 a contract. You know, maybe you got $1, so it's only $4 in. You know, but you make a couple, it does, you know, they tell it, corporations, they tell you to pick up the pennies and then to make the dollars. After you squander away a couple of decades, you'll, you know, what, take $100 at 3%. I guess I could do that myself. Take $100 at 3% every week, you know, multiply it on itself. You know, 3% a week, 3% a week, 3% for 1, 2, 3 decades. Wow, that's a Ferrari, Lamborghini, and the house. You know, that's, I know you guys want to swing for the fence, which is fine. You know, the only time it really swings like the fences is you're being hit by the pitching machine, right? It's because you don't have a freaking plan. You know, here's a plan. I guessed, but I got $50 on this thing. Okay, so the most I can lose is the flip side of it is the $50 plus the commission, 56. So now I'm trying to buy it back for less. It's you know, it's just like everybody else. All I'm doing is just managing the numbers. You know, we'll see on this. You know, what happens if it pulls back on a day? You have to set an alarm on it. You know, what happens if it does come back through here? You know, through here, alert me. You know, now somebody got 2 things going on. Now we're really thoroughly confused, right? Where's our Microsoft again? Follow, just find one thing. Here's pivot, 48. Well, that'd be a nice afternoon, right? A couple hours to go. No video. Bounce there maybe and up to here. That's 110. What are you? 106 and 108. All right. So no video. Okay, so we got a couple of lines here at 103 or whatever. So I have to debate on those. The puts are, I think, what, 99 and something, whatever. I should just really take them off. It's for $20, whatever, for, you know, for my game. You know what I'm saying? What else could I do? If I sold those, I could buy some around it. What do we have though? Let's take a look at that real quick. The video. All right, so what do I have? I have these puts. Now I'm short these, so I need to be long something. So if I buy this, I'm going to cost me, right? But if it goes back the other way, already, okay, hold on. So this is just a spec play. I still get the money, and I still get it. I get an extra. I get the difference of what this costs them. So an extra maximum. If they go the other way, I'm not in. If they go the other way, it's 20. So I'm paying a dime. Well, let's just see what happens. What the hell, shit. So I'm paying a dime to see what happens on these, but I'm covered. Okay, this one, I'm paying 20 cents. That's fine. Okay, so here's the story here. All right, I'm already short these things, right? And I'm going, well, should I hold on to them for 4 more days for what, 20 cents here and 30 cents here? Okay, so then I thought, well, all right, what happens if I buy the puts? If it comes back through, what happens? Well, I actually have, I now have those naked puts hedged, okay? If this does go to 0, okay, it would, 20 cents would basically come off of this, all right? But my maximum on here, because I'm naked here, is I pick up I pick up $1 from the 100s to the 99s, right? Okay. So we already have those on, right? Yeah. Okay. So then I go back. NVIDIA. Here are my puts. I have to get out of these things anyway. Create closing order. Right now it's trading at $0.10. The most I can make is 90 cents, you know, X amount of dollars. Do I want to take half or more? Well, just what do I want? I should actually look at the chart. Well, this one here's the lower priced one, so I'll do a half on this one. Do a half. This is if NVIDIA would come back down. I can actually plot this out to see where it's been spread wise, but I'll just put it in for 50 cents. Well, let's do 60 cents. Cost me $1 and something 64. We'll do 64. And then on the other one, we'll do a little bit higher. About 78. All right. So what I did was I spent basically on this one is I spent $0.10 on one to try and make 80 cents, you know, on a spec play that way. And 20 cents to make 80 cents on that one, on the other one here. Then I don't have to worry about the last 20 cents. You know, it basically cost me 10 cents to see if the 20 cents goes to zero. You know, insanity, it's finest here, but that's fine. You know, it's just, the idea is just trying to take that mathematics and put it in your head. All right, so getting back to the NVIDIA chart, okay. So happy place about 108, and I was looking for 106 put. Well, that's fine. And maybe everybody's looking for 108, and it only gets to 106. It's just a strategy. If it gets to 108, maybe it gets to 110. So maybe here we go back to NVIDIA. I got the 106. You know what? I'll buy the 108 right now. You know what? I'll buy it for 20 cents. See what happens. You know, if I get it, whatever. You know, the most I can lose is 20 bucks plus commissions. But it's just math. That's all it's, you know, I just picked 20 cents because of how far out of the money it is, you know, how quickly it might, you know, what happens if it does swing up to the next, whatever. You know, I have the profit off the NVIDIA here, off the naked, you know, I'm already short the puts. You know, what I should really be doing is I sold some of them off, right? I sold some of these puts off against current positions that I already had profits in. You know, now this one's actually beginning to lose money. So I should just say what I paid for them. No. All right, so nothing's beeped and farted yet. I will eventually get rid of all this fucking stock crap. This is, like I said, it's just a reference. But some of them are, it's like, I guess if I limit it to around 40, it'd be okay. But there's all kinds of stuff on here now. But eventually I'll get it down to one page. On the grains and stuff today, the rollovers and the other contracts, so I had to get out all the grains. I think I'm short some options on here. I guess one left. Well, I might have bought, buy one. Okay. And wheat still going on here on the wheat. Natty gas, I added some deferred contracts. I think December actually went lower, traded lower. Actually, I think it was December of, let's take a look at that. Do I still have those? Natty gas Z of 18. Okay. So it actually traded lower than some of the previous lows. There's my little Hikanashi. All right, so that one caught my attention. All right, traded lower. Okay, so that caught my attention. I can't get any of it though. Can't splash it on the board. Got down to 97, I think. Yeah, 97. All right, does this work out? Yeah, see, it traded below previous lows. Okay, so that caught my attention. It's way deferred and it's making new lows. So that's actually, this is kind of being structural here. Come on, just buy. Thank you. All right, so that's basically it for today. What else do I have going on here? Oh, these are just the stocks. Well, I'll go back to Micro Squishy. All right, a couple more pennies. Get up there. My WM. JNUG. KKR. That one I had short on, right? KKR. Micro Squishy. NUG. Is that it? Pfizer. QQQ. Okay. Where are we at? Weekly. Wow, 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 wow. Hold your horses. We're back to another one. All right. So, expect, what are the QQQs today for the calls? Take a look. QQQ. Here's one you can follow, right? Qs. Let's take a look. Low on the calls. Here's one that got to a nickel. It's trading at 7 cents. That's fine. It's just a math thing here. This one got down to a dime. All right, it's trading at 14 cents. All you'd have is a whopping penny. You'd actually break even with $1.50 commission in and out. Okay, but it's all in the structure. You know, you buy it, you're in, you have something, you know, it's number wise. You know, don't go out way out here. That defeats the purpose. You're trying to get something where they, you know, if you buy something for a nickel, it's costing you $1 a day, and it's a cheap form of entertainment and education, and you get to watch it. So what do we have? We have the Qs making an apex here. Trend line. You know, we got ourselves a triangle going on here. You know, so we'll see something with the Qs. All right, today or tomorrow or something. What is this, a 4-hour chart? So what do we have here? 4-hour chart, divergence on MACD, higher prices, lower. You know, this was Friday's action, right? Thursday's action. Yeah, Thursday came down and Friday came back up. You know, one day, all you had to do was wait till Thursday. You had the divergence. Just place in your orders. I'll buy some puts that are going to expire on Friday. Zippity doo-dah. You know, sit on your hands until the next 4-hour comes back through again. You know, here was basically oversold, like back in here, right? Buy the calls or whatever. That's what happened on Friday with the NVIDIA and all that fun stuff. Now we're back to an apex here. So either the Qs are going to come down here and make a bigger swing before going higher, or they're going to break up, and this actually the angle of ascent should increase something fierce. All right, but you're just watching it. At worst, it's sideways for now. All right, there you go. More later.